Hey, what's up, YouTube? Welcome back. Welcome back. I know it's been some time off from the channel and stuff and all that. Just kind of been enjoying life a little bit, taking some vacations, some mental resets where it's been needed. Market this past month has just been incredible. I mean, swing trading has paid so well. I mean, honestly, any real method has, but I feel like swing trading has finally, I guess, come back to life. And a lot of people are making some really great money in return. So many trades that we've kind of hit this past month. Also, the last most recent weekly watch list that we did, nearly every single name kind of did and traded out the way we wanted to, right? So much money to be made in this market. We're literally sitting in an AI mania right now, and it's just euphoric and a lot of plays to catch still, in my opinion. So again, let's just go ahead and get started, guys. A reminder, if you'd like to receive my watch list a day in advance so you can use it as a form of homework to prep and create your own analysis, make sure you follow me on X. I tend to release the written out watch list usually a day or maybe a few hours before my video gets released. So it's a good way for you to go in and, you know, practice. See if your analysis ends up comparing to mine. I think it's a really great way for you to push yourself rather than waiting for me to give you all the answers or my opinions. You can, cultivate your own and then see how it compares. Also, my weekly, or not my weekly, my checklist guide is still out and available. It's pinned in my X. It's very helpful. People always ask me, hey, what is the criteria that you're looking for? How can I look for names similar? Well, apart from, using my scanning methods, that that market guide checklist is basically what I use on everything whenever I'm filtering things out. If you can cross out a good chunk of those or answer some of the questions relative to some of the names that you're looking at, more than likely it's going to become a favorite of mine. So make sure you use that, incorporate it. I worked really hard on that, and I hope you guys continue to implement it when you do trade. Remember, none of this is financial advice. This is just me sharing how I plan to approach this week. This is a very big week in the market, by the way. We have FOMC, we have GDP, and then a lot of major tech is reporting Wednesday. So we can have some very volatile moves. And a lot of things are coming up into earnings as well. So please be cautious on that and make sure you are aware of the things you are swinging ahead of earnings, okay? So without further ado, let's go ahead and get started. It's not going to be a crazy watch list. We have about 8 to 10 names, and we should cover them fairly quickly. First up on the list is CDNS, Cadence Design Systems. And I am mainly focusing on this on the weekly as we have some really pretty Wyckoff and overall bullish order flow structure here to kind of look at. So one thing to kind of talk about is what it's been doing since 2024, right? You've been stuck in kind of this overall consolidation until you had a really nice external sweep of your broadening, right? Your broadening got swept. And now this is the overall magnitude, right? This is the overall higher time frame chart. And when you got that really nice sweep against your weekly lows that you've been ranging since 2024 of February, guys. This has been a whole year worth consolidation, absorption in the making. And you finally break out into the summer, and then you correctively retrace back into a lot of confluence to give you confirmation of this newly established trend, right? Because you were in this consolidation for a year, you break down, creating new lows, but then look at how price aggressively pushes back up. And also something to pay attention to is what you did here, right? So I'm going to drag this out a little bit as this is also important. I'm going to annotate this. I don't think I have... sorry. We'll just call it that, right? So look at how price displaces down, go back to reabsorb and refill orders, and then you aggressively displace into new lows, but it gets countered immediately. So now we have overlapping inefficiencies back into a confluence of discount, right? OB, and the way you retraced into that. Remember, when you're in a trend, guys, and I don't want to waste too much time on this, as this is very repetitive stuff from everything I talk about. But when you're in a trend, right, pay attention to the external, right, meaning your weekly, monthly, overall trend, because in those areas of retracement, that's where you want to pay attention to those dailies, the 4 hours, and all that stuff, because they will show you structural alignment or structural change before the higher ones, right? And it acts as a domino effect. So going back into this, look at how clean you're absorbing your engineering sells or buys in a way to where it doesn't add any discrepancies to the trend, right? You're not getting this, right? So CDNS went from weekly low to high. You had this move, right? And then on the retracement, this is your swing low, swing high. You're not doing this. You're not aggressively selling down with big hurdles, right? Rather, you're engineering that run. You're only taking out most of those external sell side, right? And you're coming into a point of confluence, similar to what you see here, that allows you to rebalance a lot of those orders to then confirm the next extension of the trend, which is basically what Cadence did here. And look at the delivery. This is what I talk about all the time, right? Coming into those points of confluence, this checks out a bunch of things from my infographic, right? My market guide. And look at how price delivers. Yes, we're late now out of the discount, but now we have the confirmation of that the trend is still intact, or that these swing low to swing highs, changing that overall structural shift from all of your trend and now being full time frame alignment, we now have the development to confirm that, hey, this is exactly where buyers wanted to step in. And now buyers, regardless of if you dip or not, this is all point of reference. Buyers want to potentially expand this up into back up into new highs, right? Higher low, higher high. If you got a swing low, swing higher low, higher high would be the next objective. So if you think, oh, we already had a crazy like 80-point move, okay, but there's still potential another 80 left in the tank, and you can now use this area here as your reference point to create some form of invalidation. So I really like Cadence. I think the overall monthly and weekly and daily, everything just looks super pretty. And I mean, you have extensions up into continuation of this broadening. I mean, it just looks super clean, guys. And it's definitely, sorry, I'm just adjusting this. This looks super clean. And I definitely think structurally, this isn't done yet, especially with all this engineered selling that it's had. And now you're finally getting that displacement. I think it can correct it rather really quickly. One of my favorite charts. You do have earnings coming up, which is the only downside. But hey, if the crazy thing is, if earnings doesn't work, you still have this applicable, right? You can create a higher low within the daily that confirms the weekly extension. So still a lot to look forward to on this. Even if earnings doesn't work out, you just have to confirm the buyers on that first daily higher low. Next up on the list is MRAM. So this is a very, very crazy monthly chart here. And I'm taking into account the entire monthly range. And I really love the fact that you're still respecting this monthly discount after refilling. So look at this, right? Look at this really nice SR flip here, coming back into the overall discount of that monthly range. And you're kind of just still absorbing. You're still balancing out really well. I like the fact that this has a really clean Wyckoff look to it. And again, price delivery out of this overall sell after sweeping a lot of those monthlies, and how price displaced afterwards is what really has my focal point here. I'm just going to zoom this back out a little bit. And now we have a really aggressive 3-2 up continuation on the 2 week. The weekly has a 2-2-2 reversal and continuation. So a lot of strong directional movement is occurring on this, and I think it could be a good semi-laggard. Your -4 extension does put you up into new all-time highs, or not new all-time highs, but current 52-week highs. And I do believe when you're looking at this 2 week, right, and you zoom back out, I do believe this massive monthly range could become an objective, like 19.7, 22, all very applicable targets headed into Q3 and Q4. I really, really like this name. I think it's a name that hasn't really been talked about much within the semi space. And right now, like I said, AI bubble, semi bubble. If it has momentum, if it looks good, it's probably going to get some kind of interactions, right? Again, another one that has earnings coming up, but that doesn't matter because if earnings is poor, you still have a lot of areas to reference for buyers to stabilize just because of how you consolidated, broke down, consolidated. Then you had a really nice manipulation that redelivered into new daily highs. So structurally on the daily, it has changed again. And so there's still good internal compartments for this to find some stability and go higher. This is just an alternative if earnings doesn't play out, but I still think it's a pretty good chart from a monthly perspective. Next up on the list is MTCH. Match Group. I think this is a very slept on name that not many are talking about since it's not really related to a lot of the things people are chasing right now. But this has a beautiful, beautiful, beautiful weekly Wyckoff. I love that you got the spring here, and from a structural standpoint, lower high, lower low that did take out your 2023 range low, and then you delivered into new highs, right? And what I like about this is within this range, you didn't redeliver all the way back down. Rather, you cleaned up a lot of this engineered liquidity, came back into your discounted zone. So we know we're at a discount of the new established trend. And then look at how price delivers, right? This is what I love. Whenever you are entering discount or whenever you are finding that higher low or lower high within your trend, this is the best way to confirm it is how does price deliver? Change instead of delivery rate. Look at how aggressively you move up. Whether or not you get a dip or not, I think this is setting up for a new higher high back up into your supply range high that was established since 2023. So I'm looking for 40 plus on this to see how it cleans up. Very, 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 very pretty structural here on the weekly. Next up on my list is DUOL. And I'm going to look at the 3-day chart here just to clean it up a little bit. So, or the weekly, my bad. So you have a really nice clean weekly 3 driver. Let me just clean this up a little bit so you guys can see what I mean. So you have a really nice clean 3 driver pattern back into your discount of your dealing range. So when you take into account where you were last consolidating before you had the new expansion highs, you could see how prices only delivering into those external sell sides that gave you confluence into a weekly breaker, weekly discount, and now you have a nice established daily OB in this green range here, which is also a gap. So really good confluence here. Question now is, do you finally get the breakout? And I think it's going to come down to earnings. Yet again, another name that's probably going to be very reliant on that, depending on this move. But if I had it my way and earnings weren't coming up, I do think with this tree driver, now that all of that external and major sell side has been cleaned up, I do think the buy side of the curve is very, very much ready from this. So I do think this has the potential to run into at least 17.5 and higher from here. I think it's setting up really, really nicely. My invalidation would be if you lose like 11. You get like a weekly close under 11 and all this fails, and then you probably go back and drop down to maybe like 9.7, 9.3. I just really love this overall build up. Super clean. Again, another staircase analogy back into a really nice point of reference that does check off a lot of the things from my market checklist guide. All I think now is it just needs some kind of catalyst. And if earnings is good, that catalyst takes you all the way up into the 18 plus. Super, super nice. KO, another one of my favorite charts here. Price is redelivering back into a very, very clean, I guess you could call it monthly, weekly breaker. If anything, that's been around since 2024. Look at how long Coca-Cola has struggled to break this upper area, right? And now this upper area not only was broken through, but they aggressively took you into those new highs. So I took the last swing low to swing high on this weekly, and this weekly and monthly breaker actually correlates with your overall discounted zone of that dealing range. And now you're kind of just absorbing. You have confliction, which is something that we have to pay attention to because of how price redelivered, right? When I talk about delivery back into your retracements, or you're trying to confirm the trend, remember, you want it to be engineered, you want it to be manufactured. You don't want it to be aggressive, because then that creates, I guess you can call it, like, it creates fences, it creates obstacles. A fence is harder to get over than a staircase, right? So when you have something like this that does this versus something that does this, one is easier to climb over than the other. So that's why I'm saying, when you're looking at KO, we do have obstacles just because of how price delivered back into this. But I really like the fact that you are showing a really good visual representation based off of candle context, how this all-time high has started to influence buyers now, right? 2024 high finally displays through. You cleaned up this weekly low here from February 2nd, and now you've been stabilizing 1, 2, 3, 4, 5, 6 weeks of buyers showing their hand. Same thing with sellers though. KO now needs to aggressively reclaim 80, but I really like this overall area between 71 and 75 to potentially buy it up and see if buyers can step up. And if we lose 71, then okay, we go back to a more deeper retracement of the range. But while we're up here and they continue to defend, I do believe that this could make a really good entry point for higher into earnings. Again, another one that does have earnings coming up. I think it's this Tuesday, actually. So choose your weapon. But I really like KO. And a lot of these charts are based off the weekly, because if we're in this euphoric mania, like, I want to focus on the higher time frames right now, as they can show me a bit more in terms of what the potential progression could be. Qualcomm is really nice. You cleaned up a lot of this engineered, manufactured, and you kind of sold it all the way down. You found exhaustion near monthly and weekly range low, and you had really good delivery. So price aggressively reclaimed back into those monthly highs. And when you're taking into account the overall weekly range, so I'm taking this last known aggressive up candle before the sell. If this is going to be a true lower high, this is where I would put Qualcomm at a premium. So I would like to see Qualcomm continue up in the 160, 170 range, and then see what happens from there. So you have really good reference points as well to kind of go back and check, especially with a previous month high now being taken. You can use that as a potential dip and rip zone if it does retrace. But at the current moment, I would like to see this clean up. Right? I would like to see Qualcomm trade up into that 160, 171. Whether you get some kind of small little re-entry, that would be my objective. And then from here, we can potentially address whether or not the trend is truly going to change from a higher standpoint degree. Right? If this is going to truly change, you want to aggressively push through 176, then get another retracement, and then attack the 200 highs. So we're going to see if this is just a big old weekly range. And if it isn't, then this would be the area to sell most of your longs. Next up on the list, and I've already posted about this, so I won't spend too much time, but if you go back and reference VST and CEG. I'm mainly going to just cover VST right now, but VST has so many things that I like, similar to CDNS and MTCH that we just covered. This is beautiful, guys. And we just had an energy infrastructure bill. I mean, think about it like this. If AI demand continues to blow up, what powers it, right? And with a now government-backed infrastructure energy bill, VST could be one of the main plays for this. And it hasn't even broken out yet. If it's a direct energy AI play, it hasn't even broken out yet. And when you're looking at the trend, swing low to swing high, look at how price has engineered back into this area of discount, right? Whether or not you get one more dip, because you do have earnings coming up, and honestly, I would love it if you get a gap completion and maybe somewhere between 120, 130-ish. If we can get this, I'm a pretty heavy buyer into leaps. Now, alternatively, this could gap up into Monday with that energy bill being announced and people trying to find other alternatives to some kind of AI play, as this one hasn't really ran. CEG, TSN, I believe, is another one. Next Era Energy, NEE, all those have really good confluences to this. But guys, engineered liquidity. We have a lot of LRLR, discount of our swing expansion to confirm the uptrend. We haven't really done anything since September of 2025 except just slowly gravitate back into an area of discount. We haven't had any displacement just yet. The daily is trying to potentially do it, but if you want to confirm it with a breakout, you need this to now push above 176. If that happens, 205 comes really fast. And if not, if you can't get any development above that 175, 176, then again, there's still potential for a discount entry here, or maybe a sweep back into like 140. I mean, earnings are coming up, so that's going to be really telling whether or not this is going to do well, obviously. But this is one of my favorite setups, and I think as long as we stay above like that 122 area, 131, I think this sets up for a really good 6 to 12 month swing play. So focus on Septembers, focus on some leaps. But if this works, I mean, I think swing low to swing high puts you up at 227, 240. And maybe it goes into another euphoric run similar to what it did over here. It was right around the same time frame too. I mean, look, you sold off into April and then it just took off all the way into September. Sold off all the way into April. I mean, what do I know? Question is, did this one also develop in a discount? Oh, it did, just a little bit deeper. So yeah, keep an eye on this one. I think this one's setting up really good, whether or not it gaps up or not. I really like September 190s, January 2027, 210s to build, maybe even some A's. This one is a bit more of a riskier trade, but Duolingo, probably the most, if not the terrible, the worst software name ever. But you have some characteristics here on the 4 hour for me that are hard to ignore. And that's being how you've developed into these swing lows and then immediately pushed back up. So we got a swing low to, swing lower high to swing lower low that cleaned up your last earnings low and basically has done nothing since. But now you have good development within this lower time frame structure that could potentially give us some kind of opportunity to trade this back up. So we are into a 4 hour discount here, getting really close. You filled a gap and then pushed back up into the range. Whether or not you redeliver back into this and then trade out post ER, I think it's setting up. And I know that's terrible to say because nobody likes trading this, but I mean, you have internal Wyckoff with displacement and a gap up against your broadening lows. So you can even correlate that as a little inversion here. Inside day, back into discount. This has potential to run back up into 110, maybe even 120. Can it do it before ER? Potentially. I think it's worth taking a stab, and my invalidation would be like 93. Because if 93 fails, then you see like 70 and lower. Again, this has been a terrible name to trade, and it's been very unsuccessful with every attempt. But there's a little possibility here, and again, everything happens on the lower time frames before it develops on the higher ones. It acts as a domino effect. So if we're going to see any kind of correlation or change in trend here, it's going to happen now. So definitely something to keep an eye on, and no one's really talking about it. Another favorite setup of mine is Dow Inc. So chemical specialty. I just love how well this structurally develops. Similar to what happened over here. You had a really nice breaker. You had a really nice sell side raid, new highs. Now you did it again. Nice sell side raid, retested your last previous high, and then redelivered aggressively. Now you're kind of building out really nicely here. You've kind of been in a range since March, so about 1 month worth of range. But again, last known high before the retracement, expansion, and now you got another breaker retest with a previous week low sweep back into your golden pocket and a daily gap. What do we know about gap ups? Historically, they tend to support buyers. And now you're getting really good buildup, especially after the sweep. You got a really nice retest. I mean, I wouldn't even mind if it develops a little bit longer. But I do think this wants to potentially run back up into 45 and higher. And then you can even take into account the extensions here. If we're looking for an objective price target here, so we'll do this. Whoops, it's the wrong one. This one. Nope. This one. There you go. So yeah, look, extensions put you up in a 46 and 51. So I think this is setting up. I mean, as long as you continue to develop above, personally for me, 33, 34, I still think it's a good opportunity to trade it up. and you have, I think it's a inside week. Again, this can still deliver because this is still all part of your weekly range. So even if you get another sweep, like anything above 32 is still viable. I really like it. I like how it's developing. I think it's setting up again. And yeah, actually that was pretty much it, guys. There's a few other names that look good, but they're all ER dependent. Again, if you find something with momentum, again, we are literally in a euphoric market right now. Continue to trade what looks good until it doesn't, because so far everything is either absorbing or continuing to displace into new highs or confirming the overall trend that it's in. So don't be too hesitant, because what is high can still go higher. But that also means, as we are overextending, don't play so aggressive. Just play smaller size. That way, if we do end up managing to get some reversals from us being where we are, again, everything is very overextended. If you're sizing in smaller but still taking advantage of the momentum, it won't hurt you as much, rather than you trying to get that FOMO and chase everything super size. Like, that's how you get killed, especially in euphoric markets. When things are aggressively displacing up or displacing down, that's always the best time to set in traps, especially for traders who think they're on top of the world. The market doesn't care about you. But so far, price hasn't really shown any sort of development differently. So in the moment, just take advantage of what you see. Just, be cautious. Don't FOMO into 50 things, guys. So yeah, that concludes our watch list. As always, I do these videos to hopefully help you see how I trade slowly. Everything is very repetitive for me, because this is the model that I truly enjoy trading, as it's shown me a lot of repeatability, and that's all that matters for me. As always, thanks again. Leave a like, share a comment, tell me what play you like the most, and that's it for me. See ya!